opportune time for them to also answer to you. There will be somebody monitoring the chat as well. What we'd also like to say is we will be, if we don't manage to reach all of your questions in the chat, we will be publishing a Q&A fact sheet along with our partners post the event. If you cannot hear the presentation at the moment, which you won't hear me saying that if you can't, the issue is likely with you. Please check your speakers and your volume, because we have done the pre-tests on our side and everything's working okay. And finally, as you've just noticed, the presentation will be recorded, but the presentation recording is really for the sole use of the internal partners on this presentation for record purposes, and it will not be distributed. However, the presentations will be posted on our social media channels of all the partners and also on our website by May the 5th, in time for us to review and consolidate and just give some views on the webinar. So we'd like to thank you for your patience on that as well. I am doing a quick introduction here, and we wanted to contextualize the presentation and why we're talking about 18A as Ignatello. And for those of you on the call who maybe aren't aware of who Ignatello is, we have a lot of participants who we may not have connected with before today. So Ignatello is a nonprofit trust. We have been around for about 20 years. We celebrated our birthday last year, and our organization has really pioneered and worked around a model called advancement, which I have up here on the slide. The model is something that we created, but the term advancement is a well-known university sector term that fundraising, development, and advancement departments use throughout the world. But in South Africa, Ignatello was really instrumental in pioneering the term in the nonprofit sector through its founders. And we found over the years, not just working with the higher education sector, but that this model became quite translatable to civil society and the nonprofit sector, which has been a tried and tested model. So Ignatello is here to strengthen our nonprofits and institutions and organizations within civil society to become more attractive for support. And we advocate also for an enabling environment so that our nonprofits can grow and continue to do the important work that they do. And we also encourage and we grow philanthropy. Just a quick overview of our site and where we're located here in Woodstock. Our partners today are coming from Woodstock and Cape Town, from Durban, and also from Pretoria. We, as Ignatello, are based in Woodstock. We work nationally and also beyond our borders on the continent. We have what is called a nonprofit sustainability hub. And this nonprofit hub is a space of about 11 square meters in Woodstock. And we consider ourselves the home of the nonprofit sector. And so we are accessible to the sector for resources, which includes, you'll see here on the slide, the hub itself, which has office spaces, meeting spaces, and printed and digital resources. And these resources are specifically developed around sourcing and nurturing the growth within civil society. We focus on building sound governance within the sector and nurturing our organizations as well to become financially resilient. We also work with boards and different types of entities and share good governance practices. And lastly, we offer a locally homegrown funding finder database where you can search for funding and grants and supporters and investors for your cause and your mission. And this is freely accessible in Woodstock on our site. Otherwise, it's accessible remotely from wherever you are at a fee. And what I have here again is, I think I'm getting messages that we are still admitting people. I see about almost 300 at the moment. But I'm still going to continue in the interest of time because we have a short space today of just until 1 o'clock. The context again of today's webinar is the advancement model that I spoke about earlier. And in 2010, our staff got together and thought, what are the key elements that we keep speaking to nonprofits about and that have been tried and tested to help make us attractive for funding and getting away for that charitable paradigm of asking and going with a begging bowl, but actually building up these key elements that you see here that makes you strong and attractive for investors to want to join with your mission and invest in the cause. And we do say investors because we are helping our grant makers to also reach their mutual missions and goals alongside us. So the definition of advancement is a systemic and integrated approach to building and managing external relationships with key constituencies and stakeholders in order to attract support. And the new 18A requirements fall within obviously financial management for obvious reasons, which we'll see as one of the elements there, because we need to track these new requirements. We need to report legislatively around them. And sometimes this model takes the shape of a tree, which you'll see here. Sometimes it's a lotus flower, which you'll see, and this is the galaxy. In addition to financial management, however, the reason why we're holding this webinar is because there's an overlap with some of the other elements too that make us attractive for support. You'll see here external relationships, and while gathering the new data and fields under Section 18A, there is some involvement in building relationships with the people who are investing in us. There's the human capacity element and considering that in terms of what the new requirements are going to need. Also, it's a fundraising mechanism, isn't it, 18A? So it falls within our element of fundraising tools. And then, of course, as boards within nonprofits, we have to ensure that we're meeting our fiduciary duties and that we are exercising our duty of obedience and that we are compliant. So this webinar contextually fits with quite a few of these elements, and so is a very important topic for us to consider aside from the legislative requirements. Just over here, I just wanted to give you a taste of what the program is going to look like. You'll see here we are having introductions, which I'll be finished with just now. Then we'll have some introduction and background to Section 18A, and then the actual receipts themselves. What were the prior requirements? Some of the reasons why this is being introduced, the challenges and abuse behind 18A that has happened previously. What are the current requirements? And then the next phase and testing around the IT3D. And some of these acronyms might seem foreign to you. We're hoping that by the end of the session that you'll be a bit more familiarized with it and have some tools to go back to your organizations with. And then you'll see there's a response to questions. And just to reiterate for those who are still joining, I see we still have participants joining, that again, if you have questions, please post them in the chat. We will not be unmuted just for efficiency purposes, and we will monitor those questions and we will address them as they come up. And again, the recording is not being shared, but presentations will be shared on our various social media sites as the presenters. Just before I end off with you, I wanted to introduce our partners to you and who is involved. You'll notice on the program we have Turning Point Chartered Accountants, and we also have some colleagues from the tax exempt office from SARS who are with us as well, namely Roshni Rivera Green, who is leading her team and is assisted with Holoko Sekosana, also Motulo Saroka, and I hope I'm pronouncing your names correctly. And also, I believe Mine Hendricks is here. So they will assist in fielding some of the SARS-specific questions when we get to the latter part of the presentation, specifically around the Section 18A and the IT3D pilot project. And lastly, I'd like to introduce to you Turning Point Chartered Accountants, who are your main presenters today. They are a multidisciplinary consultancy offering comprehensive financial solutions to the nonprofit sector. Our webinar today leader is Ridwan Khan, who is a CA, a chartered accountant, and has a higher diploma in tax and VAT. And he will be assisted and input by Riza, who is also a CA with a BCom and BCom honors in accounting. Now, we as Inyatello have worked with Ridwan and Riza for several years, and many of you in the sector may already know them. I have to say, as a nonprofit financial practitioner myself, having Turning Point there to assist us is an immeasurable value. They are our go-to entity for clarification around tax. And I want to say this not as a punt turning point. There's no exchange of any financial benefit here, but because Inyatello is in this space itself as a nonprofit, we can attest to the fact that we struggle sometimes to receive professional advice. And we often talk of this, and Turning Point will tell you this themselves, that tax is a very complex discipline with various expertise. And, much like I think Ridwan uses the example of a medical field where a doctor is a specialist in your body or your brain, your bones or your digestive system, it applies to the tax discipline as well. In the nonprofit world, whether it has to do with VAT, Section 18A, or income tax, and how this applies to nonprofit entities. So, I've worked with different accounting professionals, and sometimes either they're not available or they often, misintending, give sometimes advice that isn't accurate or specific to our space in the nonprofit sector. So Turning Point Consultants, or TPC as they've known, is a real reassurance for us. And I'm sure many of you have worked with them, and we really appreciate the work they do and the grace in which they do it with and share. Today is a free session, as you know. It is a gift to the sector from Turning Point Consultants and Inyatello. And as I mentioned, SARS will be assisting us as well. So I'd now like to pass on to the stars of the show, if I can call them that, our presenter, Ridwan Khan. Thank you.
Good morning. I'd like to first just check if everyone can hear me. If somebody could give me a heads up or a thumbs up.
All good, Ridwan. We can hear you.
Okay, perfect. Very good morning from a cloudy Durban, and a warm welcome to all the participants. Thank you very much for joining us this morning. As Surya has mentioned earlier, we're still getting a number of participants still entering. So I'll just quickly reiterate for those who have just come in the session this morning. I'm going to be presenting just on the background of 18A. So really current legislation up to about the end of February this year. I'm not going to be looking at any of the new amendments that have come in the next 50 minutes or so. My colleague Riza Amra and Roshni from SARS would take you through that later on after my session. So really the objective of my session is just to get you up to speed with the legislation as it is. We still find a number of misunderstandings, especially with regards to 18A, and we thought it'd be prudent for us just to go through this before we actually get to the actual amendments and changes. Just from an admin side, I'm quite happy to field questions as I go along. Unfortunately, I cannot see the chat room, so my colleague Riza Amra would be looking at that, and every now and then he would be just stopping me to be able to answer those questions. I always like to ask as many questions as you'd like. There's no such thing as a silly question when it comes to taxes. Often you have a question in mind and someone else in the audience also has the same question. So by asking the question, you actually encourage learning. Okay, just having a bit of an issue, I think, with participants coming in, just affecting my slideshow, but we should get through that. Okay, just some background to myself. My name is Ridwan Khan, as Surya has introduced me. I've been consulting to the sector for the last 15 years or so at a grassroots level. I sit on a number of boards also on non-profit organizations where we really get involved even from an operation point of view. So we understand the non-profit sector, not only from a tax and financial point of view, but also from an operational point of view. And we've been assisting the sector on a number of different issues, ranging from even operations to finance and management, and obviously taxes. So it'll be my absolute pleasure to take you through the 18A legislation this morning. Just bear in mind, I've only got about just over 45 minutes to get you through it. By no means is this going to be a detailed explanation of the legislation. I'm really going to skim through some of the more important parts. If I haven't tackled any specific part that you wanted perhaps maybe some clarity on, feel free to pop in a question. And even if we don't get to it in the Q&A after that, we'll try to then find a way of answering all your questions via emails or another means later on after the session itself. Okay, just in terms of what I want to get through this morning, I'm going to be starting off with just the high-level mechanics of Section 18A, really basic stuff that all of us should be aware of. And then we're going to unpack the nuts and bolts as we go along. As I've mentioned, none of this presentation of mine today is going to cover the new amendments, but this is just a background for you to understand the legislation and perhaps maybe just reinforce some of the knowledge you already have. From 12 to about 12:30, my colleagues Riza, Amra, and Roshni would then take you through the new requirements that have come in. Okay, so let's get down to the first aspect is just looking at the basic mechanics of how 18A works. You could have a donor, whether it's a corporate, an individual, or a trust that will make a donation. Remember, a donation in this context, which we'll look at later on, has to be paid during the year of assessment to an 18A approved PBO. Now we look at the different type of public benefit organizations you have out there, but it has to be a Section 18A approved public benefit organization who would then issue what is called a Section 18A certificate or a Section 18A, perhaps maybe a receipt that is generally known out there in public. So this is your basic mechanics of how the 18A would work. What's quite important is that the donation has to be paid. We look at what the concept of a donation is from a SARS and tax point of view. And the PBO has to be a Section 18A approved PBO to be able to issue that 18A certificate. So in a simple example, I've got in example one, I've got a donor's income of 250,000 Rand before any deductions. After deductions, his taxable income is about 220,000 Rand. And looking at the donation of 20,000 Rand that he's made, he would qualify for the Section 18A deduction. And his taxable income would be reduced to 200,000 Rand. So in terms of Section 18A, the limit to the deduction is 10% of the taxable income of a donor. So in this example, the donor's taxable income of 220,000, 10% of that will be 22,000. So the entire donation of 20,000 Rand would be deductible, and that would reduce his taxable income to 200,000 Rand. Quite straightforward and quite simple. Let's look at example 2. Here we have the donor's income of 220,000. So that's an adjustment from example 1. His deductions of 30,000 Rand remain the same, and his taxable income now drops to 190,000 Rand. Now assessing this against the donation of 20,000 Rand, 10% of 190,000 Rand will only give you 19,000 Rand. So that is a limitation to his deduction. So this is how the 10% would work in practice. His deduction available will only be limited to 19,000 Rand, and he will not get the deduction for the full amount of the donation. Good news is that 1,000 Rand, which is the remaining amount of the donation, will be deemed to be paid in the next financial year, and he could carry it forward. He'd obviously have to maintain a record of this, carry it within the next financial year, and he'll be able to claim that deduction in the next financial year, or in the next tax year rather. If he does not qualify for the deduction in terms of the same provision, he would be able to continuously carry it forward until that deduction is made available to him when he does come under the 10% threshold. So this is the basic mechanics of how Section 18A works. We all know the background to Section 18A in terms of government is encouraging donations to certain activities in the sector which government regards as high priority, and government understands that these activities are a huge mandate of government's responsibility as well, and the non-profit sector is assisting government in their mandate, and therefore to encourage donations to these specific activities, the concept of Section 18 has been introduced. Let's move on to what really qualifies for 18A for an 18A receipt or certificate to be issued. Just taking a step back from a legislative point of view, a normal non-profit organization who is actually carrying out some kind of non-profit activity, or in SARS terminology, in tax terminology, it's called public benefit activities, can apply to SARS to be tax exempt or tax or PBO registered under any activity falling under Part 1 of the 9th Schedule to the Income Tax Act. So the 9th Schedule to the Income Tax Act is quite a comprehensive list of activities. There's about 70 different activities under the heading of welfare and humanitarian healthcare, and it goes right down to general activities. So this is quite a comprehensive list. This is your entry point to becoming a public benefit organization. Once you've satisfied other criteria in terms of your registration and legal aspects, you have to be carrying on an activity under Part 1 of the 9th Schedule to the Income Tax Act to be registered as a public benefit organization. Where an organization is carrying on certain activities which are under welfare and humanitarian, healthcare, land and housing, education and development and conservation and environment and animal welfare, SARS has developed Part 2 of the 9th Schedule. So Part 2 is basically a restrictive list of Part 1. It contains about 48 different activities which have been basically taken out and regarded as high priority activities for government. And Part 2 of the Schedule 9 of the Income Tax Act has been developed. And this is really what is called your 18A activities. So an organization performing any activity under these headers will, in addition to be qualified as a normal public benefit organization, they would also qualify to be an approved or qualified to be an 18A registered PBO. Now, organizations who are carrying on other activities, perhaps religion and philosophy, cultural or research and consumer rights, and perhaps maybe the other ones that are not listed under Part 2, will qualify to be a normal public benefit organization, however, will not qualify for Section 18A approval. As we've mentioned, Part 1 of Schedule 9 to the Income Tax is your comprehensive list. It's your entry into the public benefit organization regime. However, Part 2, which is a shortened list and contains about 48 activities, has very, very specific activities. And only if an organization is carrying on any of these activities will it be considered to be approved as a public benefit organization for 18A purposes. Now, this is quite important because in practice, we see a number of organizations actually don't understand that they perhaps maybe only a Part 1 entity and a general public benefit organization and do not have the authority or approval to issue 18A certificates, and they are actually doing it in practice. But my colleagues will touch on that later on, and this is the foundation of where the new amendments are actually coming in to tighten the noose around those issues that SARS has been having in the past. Okay, let's move on. In terms of other types of entities, I'm going to focus only on public benefit organizations. There are certain entities in Section 18A which also, the Section 18A of the Income Tax Act, which also qualifies for 18A approval. However, we're not going to touch on them. I'm quite happy to field any questions regarding them later on. However, my presentation is focused purely on PBOs at this point in time. We have what is called the conduit PBO. Some of you may be aware of them. These are organizations that actually don't carry out activities themselves, but they actually collect money and they then transfer the money to other public benefit organizations who actually perform the activities or services under the public benefit activity umbrella. So a conduit PBO will qualify for approval of Section 18A, but there has to be certain requirements that have to be met. So once the conduit PBO does receive the money, they have to give those monies or pass those monies over to a PBO. This PBO does not have to be an 18A PBO. It could be a general PBO. However, the money must be spent on an 18A activity. This is quite important to note. So where a conduit PBO does pass over money to a normal PBO, of which the conduit PBO has issued Section 18A certificate to its donor, the activities or spend of the money still has to remain within a Section 18A activity. That is one of those activities listed under Part 2 of Schedule 9 to the Income Tax Act. So that's quite important. There are other certain restrictions in terms of the distribution requirements of the conduit PBO, but we're not going to get into that right now. I mean, if you want to ask any questions later on, we can touch on it later. It's just that I have to move at a slight pace just because I'm moving against time and I don't want to eat into my colleagues' time later on. Okay, Rita, you can stop me at any time if there are any questions and we could just try to field them as we're moving along. What's quite important now to understand is the concept of a donation in terms of Section 18A. And there's a lot of misunderstanding. I mean, I generally get at least a few questions a month on this from our clients in terms of what qualifies for the issuing of a Section 18A certificate in terms of a donation. Now, going back to a definition, a donation is a gratuitous disposal of money or property. It's pure generosity. There should be no quid pro quo in terms of the Latin word. That means no reciprocal obligations and no personal benefit for the donor. That means if I donate 200 Rand to an organization and the organization gives me something in return, perhaps maybe a pair of shoes in return, that's not a donation. That's a normal transaction in terms of where there has been an exchange for the monies that I've given. So it's quite important that we understand that it should be pure generosity. There should be no reciprocal obligations created when that donation is made to the non-profit organization or to the Section 18A PBO. Quite importantly, from a SARS point of view, and many of your donors who may have underwent an audit or yourselves personally will know that SARS does require proof of payment during the year of assessment. So we cannot give an IOU to a non-profit or to a Section 18A PBO and try to claim a Section 18A or try to obtain a Section 18A certificate from them. It must have been paid during the year of assessment. SARS will require proof of payment. I just touched on some examples of certain payments which may not qualify as donations. The first one is quite common: amounts paid for attending a fundraising dinner or dance. Now, many a times when organizations are trying to raise funds, they have some kind of an entertainment evening or entertainment event, and donors are required to pay an amount per table, for example, 200 Rand or 500 Rand per table, or whatever it might be, and that may include some kind of entertainment and a meal. And when you test it against the concept of a donation or definition of a donation, it would not qualify because there is some quid pro quo, there is some reciprocal obligation that is required by the donor to act in terms of receiving those monies, either providing the meal or providing a night of entertainment or whatever the case might be. As we mentioned earlier, a donation should be purely there should be pure generosity and there should be no quid pro quo involved. Membership fees for being part of an organization also will not qualify for the same reasons. Amount paid for school fees or school entrance fees as well to public schools, especially those who qualify, or certain private schools who do qualify for 18A will also not qualify when you are paying these fees for your perhaps maybe relatives or family members. Like this, if you look at all the other bullet points down my list, the main reason why it would not qualify as a donation is because there is an expectation or there is some kind of requirement or obligation that has been created in terms of paying that money over to the recipient organization. And from a donation point of view, it must be absolutely free of any obligations. It must be pure generosity. Okay, so that's quite important. We see a number of issues arising from this, and I thought it's quite important to actually bed down what's the actual meaning of a donation in terms of what would qualify for an 18A receipt. Okay, in terms of Section 18A, a donation of property or in kind or cash will qualify for the 18A certificate. A donation of property is any donation which is other than in the form of cash, and the overriding requirement in all types of donations must be that the monies or the property that has been donated must be used for 18A activities in South Africa. This is another common question which we have is, can we receive monies which we are going to be using for overseas activities out of South Africa? Unfortunately, with regards to 18A, the issuing of 18A certificates, those monies must be spent in South Africa and on qualifying 18A activities. Okay, let's look at some of examples of in-kind donations. You could donate shares in a listed company to a non-profit or to an 18A approved organization of which you would qualify for an 18A receipt. You could donate trading stock from your company. Assets could be donated from the company, personal assets could be donated, even immovable property. Now, the beauty of this legislation is that it allows donors, and if you didn't know this already, it's quite important when going out to your donors to make them aware of this. As today I had mentioned earlier, 18A is an out-and-out fundraising opportunity for your organization. And what's quite important is that your organization understands it, flaunts it, makes it available, or what can be done to your donors in order to be able to receive attractive donations from them. In many instances, especially with businesses, cash flow may not always be positive, and when you go up for a donation to them, they may not always have money with them. So to qualify for an 18A, because it's been expanded to donations in kind, you could go to a donor and possibly ask them to donate trading stock or an asset, or if you require, for example, certain furniture in your organization, or you require some kind of asset, a computer, or whatever it might be, and where your donor does not have the cash at that point in time, he could merely donate the assets in his business. We've had this for a number of our clients where they've gone out and they couldn't actually receive a donation in cash, but they've managed to accomplish their goal by getting donations in kind. For example, a non-profit client of ours wanted to donate shoes to orphan children, and they went to certain stores which supply shoes and asked them, could you please donate shoes to us for this cause? And it was much easier than donating cash at that point in time for the donor, and the requirement and the objectives were fulfilled. So if you don't know about it or you haven't been using it effectively, this is a very, very effective means of actually getting in more donations, not via the cash route, but via donations in kind. Okay, because donations in kind obviously don't have a value attached to it compared to donations in cash, there is a valuation or valuation provisions contained in Section 18A of the Income Tax Act. Donation in cash of 200 Rand is 200 Rand is 200 Rand. It's not going to change, but a donation in kind obviously could be subjective in terms of the value. The donor would obviously want the highest value for the asset that or the property that he's been donated, and obviously that represents a deduction and basically money out of SARS coffers. So quite important that there's no abuse in terms of these type of donations, and therefore the Section 18A legislation provides for very, very specific valuation methods in terms of the different types of donations in kind that one may receive. I'm just going to quickly go through them. I'm not going to the overalling and overarching methodology here is the law of cost or market value of any asset, especially if it's not a brand new asset. Then one would have to look at what it could be traded on in the market, or possibly use a certain type of depreciation method which is fair and equitable. What's quite important is that when one does receive these kinds of donations, you should have a proper audit trail of how you've come to the value. So for example, if a donor has perhaps maybe provided you with a brand new laptop, let's just say a MacBook or whatever it might be, and it's absolutely brand new out of the box, then it's easy to get such a donation. You could go to your nearest store, be able to match what the value of that is at that point in time, download or get a quote from the supplier and keep a record of it. And that should be kept in. So if SARS has to audit you and to determine how did you get the value of this donation, can you do have a proper audit trail of how you've got it. And if it's a second-hand equipment, then you're going to have to, there's no specific methodology that has been provided for in Section 18A. There is guidelines. You would have to obviously apply those guidelines and do a methodical calculation, which can be substantiated should a SARS auditor then come knocking on your door to determine whether the valuation of that certificate was correct or not. So that's quite important to determine. Just a friendly advice, especially to organizations. I mean, we try to get the best for our donors. And if you are getting a brand new, perhaps maybe laptop, try to go that extra mile to give them the best value for their donation. Obviously, what you want to do is you want to be within the letter of the law, but at the same time, give them the best value that can be accommodated in terms of the certificate that they're going to get, because it's going to represent a deduction to them. And it's going to create a good relationship between yourself and them, rather than just doing an estimate of a possible value. I would generally go and get 3 quotes and look at it, and then apply my mind accordingly to what the best value could be in terms of those when determining what the value is on the 18A certificate should be. Okay, donations in services, always a contentious issue.
Ridwan, before you move on, just a few questions. I think it'll probably be a bit easier for you to maybe just address it as opposed to me just typing it on the chat. I think we have, you have touched on it, but if you can just maybe elaborate a bit further. So we've got a question from Nasli, who's inquiring about sponsorships for golf days. So I'm not sure exactly what Nasli means. I'm not sure whether she actually is referring to the sponsorship of prizes. That's what it seems. Perhaps stock donated from a sponsor as a prize. So that's the first part of it. And does that qualify for 18A? And then obviously the fees that participants would obviously pay to enter that golf day.
Okay, that's an excellent question. Remember the basic rule is that is there going to be any quid pro quo back to the donor for the donation that he has made? And secondly, that donation has to be used for the carrying on of an 18A activity. When you look typically at the sponsorship of golf days, for example, whether it's by a corporate, one of your big telecommunication companies or a bank, generally what would happen is they would give you an, I'm talking in general, there could be exceptions to the rule. I've seen a number of contracts with them. It also affects, mind you, the VAT side, the VAT implications out of that possible donation. Many of these organizations actually require something in return. Now, I'm just going to take you back a second just to break up the transaction so you understand it much better. That if I go into a store and I give them, or if I go to a nonprofit organization and I hand over 200 Rand as a donation, and I require a pair of shoes in return, that pair of shoes is something tangible, something that I can feel, touch. It's quite easy to see. And I could then see a transaction has happened. There has been a reciprocal obligation by the organization to myself as the donor. When it comes to services, it's much more difficult because services are something that's intangible. You cannot feel, touch, or see. Now, many a times when it comes to these golf days or sometimes fundraising events, the donor would come in and say, I would donate 20,000 Rand for you to the golf day. However, I require that all the participants to wear T-shirts branded with our name, that require all our branding around the golf course. I would require perhaps maybe branding on the footers of the emails that are going out. So when you look at it, if this is a requirement of the donation, then the nonprofit or the Section 18A PBO is actually rendering a reciprocal service back to that organization in terms of advertising services. So one must be very careful of those types of so-called donation agreement because it's actually not a donation per se, it is the normal transaction. However, where the contract is absolutely silent on such matters and the nonprofit or the PBO decides on its own accord to give some kind of small type of branding back. Let's just say they mention the organization in name that we thank you for the event that you have sponsored or whatever it might be. Then one would have to look at that more closely to determine whether it's actually a donation or not. But in most instances, some kind of small reciprocal obligation, and really it's a gray area. And this is why I'm mentioning some kind of small reciprocal obligation and purely on the donor's own accord without requiring this in terms of any contractual arrangement, then in my opinion, that would qualify, but one would have to look at the agreement to confirm what the final treatment should be. But generally, one would have to take care or look to see if there is any reciprocal obligation in the nature, in the form of services. And as I mentioned, goods are quite easily to determine the reciprocal obligation of providing a good. However, when it comes to services, it becomes a bit more difficult. What we generally do is, and especially from a VAT point of view, because it affects VAT quite a bit for those of you who are registered for VAT, is that we generally review contracts before they are signed. Before they're signed to determine what is the nature of the monies that are coming in. Is it an out-and-out donation, or is it a transactional requirement, transactional agreement whereby there is services being provided to the donor for the donation that he's been given rather. Any other questions, Peter?
Yeah, there are quite a few questions coming in. I'm trying to obviously address as many as I can, but there are quite a number that are coming through. If not, what we will do is we will collate and perhaps address it at the end. I think there's quite a few questions, but we'll work through them.
Okay, I think that may be better because I may be battling for time. So
that's fine.
I mean, if there are any specific questions we could do, but if you want to collate them, that may be easier. Okay, when it comes to donation of services, I'm just basically the courier guy here. I am just giving you the legislation. I don't write the legislation. My colleagues in SARS, you can fire at them during the Q&A session, but not me. I'm just basically giving you interpretation of it. A donation of services will not qualify for an 18A certificate to be issued. Now, what is a donation of services? The provision of time, skill, effort, or any type of labor free of charge to an organization. So whether your accountants are providing you, or your auditors, or your electricians, lawyers, plumbers, or whoever they may be, even rentals, the provision of free rental space will not qualify as a donation for the purpose of Section 18A. It's quite specific. Only cash or property in kind will be allowed from an 18A point of view for certificates to be issued. What's quite common is free delivery services by courier companies. Also, that's regarded as a service and therefore would not qualify. The issue we have is why it can't be qualified, and rightly so. How do you value this from a valuation point of view? If you look at the fees of a professional person, whether it's an auditor and accountant, these vary from practitioner to practitioner, and it may vary from region to region. So what an auditor could be charging in the Gauteng region could be very different compared to what an auditor is charging in Cape Town or Durban. Similarly, with all other types of professional services, it would differ widely, and therefore it would lend itself to some kind of abuse in the system. Unfortunately, when I prepared the slide, I do get a lot of questions when I normally present on the slide on why it's not so. But this is the reason, and if you are doing it, there's huge ramifications. I would urge you to immediately refrain from issuing certificates for services that have been rendered in kind. Because it is problematic, and I've seen it quite often, coming about in terms of 18A certificates that are being issued. The one thing we also have to just take note of, even discounts. A discount is not a donation that has been given to you. So if a person tells you the shoe that was going to be sold to you is going to be 100 Rand, but I'm going to charge you 8 Rand for it, and the 2 Rand is a donation, it doesn't work like that. It's part and parcel of a transaction, and that is not a donation. Remember the concept of a donation, it must be purely gratuitous. There must be no reciprocal obligation. Here, in terms of such a contract, there is a reciprocal obligation to provide a shoe to you for the money, or discount for you based on the transaction that you first have to enter into. So it's not free, it is encumbered, and therefore discounts will not qualify for the issuing of Section 18A certificates as well. Okay, if there's any questions on that, we can take that up during the Q&A, and we could fire it at the SARS officials that are here. Okay, let's move on to dual activities. Now, remember I spoke about part 1 of Schedule 9 to the Income Tax Act and part 2 of Schedule 9. Part 1, just to reiterate, is your comprehensive list of public benefit activities that gets you into the public sector, public benefit organization regime. Part 2 is a restrictive list, which is purely for the issuing of Section 18A's certificate. Now, you could get in practice an organization which carries out both an activity in Part 1 and an activity in Part 2. And very commonly is your religious types of organizations, whether it's your churches, your mosques, your synagogues, or your temples. They could have a religious aspect to the organization, which could be the building structure, the places of worship, for example, etc. And at the same time, they could be doing a lot of welfare and humanitarian work. They could run an orphanage, they could be doing feeding schemes, and the list goes on. Now, in those types of organizations, they will qualify to be Section 18A approved and registered. However, this approval will only be limited to the Section 18A activities. Now, this is quite important. So when donations do come into such an organization, they have to separate for which activity that donation is going to be used. So if a donation comes in for a religious part or religious activity, they would not be able to issue an 18A receipt for such a donation, because it's not going to be used for an 18A activity. And where a donation does come in for an 18A activity, they could then issue a Section 18A receipt. So the controlling of donations is quite important for these type of organizations, which we call dual activity PBOs. They have to keep quite a meticulous set of records to be able to identify donations that have come in for which they've issued the certificate, and the usage of the donations need to be tied up to 18A activities. Now, these are all old requirements. These are not new requirements that have come in. They've always been there. And we really don't see meticulous records of these being kept across the board. It's just a general issue of perhaps just being relaxed. And because SARS has not ordered this really rigorously, we haven't seen this being controlled properly by non-profit organizations. Now, this leads me to the next control measure that SARS has issued. I mean, this is not a new measure. It is an old measure that's come in, that has been there. But again, I haven't really seen SARS rigorously auditing this, and therefore a number of organizations don't even know that such provisions exist in Section 18A of the legislation. This is the concept of an audit certificate. Many organizations have been randomly issuing 18A certificates, irrespective of where that money is going to be spent. So in terms of a control measure from SARS's point of view of the tax legislation, where a dual organization or PBO does exist, and they have both 18A and non-18A activities, they are required to have an audit certificate confirming that all the donations for which Section 18A receipts have been issued, those monies were used solely for the carrying on of 18A activities. Now, the legislation is quite thin in terms of what is, for example, an audit certificate, what is the requirements of the audit certificate, who should actually carry out the audit, and who should provide that audit certificate. In terms of the legislation itself, it's quite thin, but SARS has provided interpretation on it, where they do give you some guidance into basically what could be required from you. Obviously, interpretation is merely SARS interpretation, and it's not legal, not binding as such, but it does provide you with good guidelines in terms of what SARS requirements are. Just in terms of what the audit certificate should be, in terms of the interpretation, it's a physical document, a declaration, and it must provide an opinion. And this part is in Section 18A of the legislation. It must provide an opinion on the use of the donations for which the organization or a department, if they are registered for 18A, has been using those monies for. So this is quite important for the guys who are 18A registered and are doing dual activities. Remember, your 18A approval is purely and only for 18A activity spend and not for non-18A activity spend. Okay, just in terms of what the interpretation note talks about from an audit certificate point of view, it provides you a basic outline of what the certificate should contain at a minimum. Again, it does not provide for who should do the audit or who it should be issued by, whether it should be issued by an auditor that is perhaps maybe registered with IRBA, or just a general accountant, or whatever the accreditation of the accountant or auditor should be, especially in the case of a PBO. With regards to government departments, it is specific in the legislation, however, not when it comes to PBO. However, I have noted down, and I'm not going to go through it in detail, but when we do share the slides with you, you could have a look at it. I would urge you, especially those organizations who are 18A registered and do have dual activities, to actually consult with your service providers, and if you have not been doing so, it's in your best interest to actually go out there and obtain audit certificates even for prior years, to ensure that if SARS does have to audit you, you are compliant with Section 18A in terms of the audit certificate requirement. Okay, I'm just going to quickly do an example with you, just to run you through the concept of the audit certificate. Here we have a caring care center, which is both conducts religious activities, which falls under Part 1 of the 9th Schedule to the Income Tax Act. It also does various activities with regards to healthcare, HIV and AIDS specifically, which is in Part 2D of the 9th Schedule to the Income Tax Act. So here you could see we have an organization which is dual activity based, both religious, which is non-18A, and healthcare, which is 18A. The center has been given approval by SARS, where it can issue 18A certificates for bona fide donations received by the center, obviously only for those activities which are going to be used for its healthcare part of its operations. I've just made a note of that the organization will not be able to issue Section 18A receipts or certificates for any donations that are used towards its religious activities. Now, in terms of the donations that it receives, it does receive donations for both Part 1 and Part 2. It's a dual activity organization, and therefore the center has to obtain and retain an audit certificate confirming that all donations that have been received or accrued during the year of assessment, which issued 18A certificates, were used solely in carrying on Section 18A activities. Now, this is quite important. It can lead to certain kind of administrative anomalies, especially if you are going to be using part of the donation for religious activities and part for non-religious activities, or part for 18A activities and part for non-18A activities. You're going to need to determine a way how to let your donor know that you could only issue him an 18A certificate for possibly partial or a small part of the amount that he's issued. So a donor could come in and give you 100,000 Rand, and his instructions would be to use 50,000 Rand for the religious activities and 50,000 Rand for the 18A activities. In that case, you would only be able to give him or her an 18A certificate for the 50,000 Rand, which is towards the 18A activities. You could get some donors who give you money without specifying towards which activity it should be used. And the intention of the organization is to use it for non-18A activities. In that case, you would have to unfortunately let the donor know that these monies are not going to be used for 18A activities, and it's going to be used for non-18A. It's going to result in some kind of obviously issues with the donor, because they look at you as an 18A body. He might well tell you that I actually don't want my monies to be used in non-18A. Please skew my monies towards 18A activities, and I want the 18A certificate. So those are practical issues that you're going to have to deal with on a donation by donation basis when dealing with that. But coming back to the certificate, the concept of the certificate, if you are doing two part 1 and part 2 activities, you're going to have to obtain an 18A audit certificate from your consultant advisors or auditors. Okay, just on the last slide, that my apologies, we have people still entering the room, so it just stops me from moving my slides. Just in terms of the audit certificate itself, we are not, as PBOs, required to submit the audit certificate with the tax returns that we submit annually to SARS. You'll note that when you do submit the return, there is no requirement to upload supporting documentation at that point in time. If the return is going to be audited, and if SARS specifically requires for the audit certificate to be produced, then at that time you would be required to submit it. So you would have to undergo the audit process with your consultants, advisors, or auditors, and you would have to maintain and retain those certificates for at least a period of 5 years. Unfortunately, there is repercussions for persons who are in fiduciary duty control of the organization who do not adhere to the legislation, and you will be found guilty of a fine and could be subject to imprisonment for a specific period of time. Okay, I think I've come to the end of my session. I've just got 1 or 2 minutes to spare, so I'm quite chuffed that I've moved. My apologies if I have gone quite fast, but there was quite a bit for me to get through. And as I mentioned, it's just an overview. I've not gone in by any means into any detail of the legislation, but it was really just to provide you with a background and summary before we get into what SARS's future intentions are and the new dispensations that have come out affecting the Section 18A receipts. Lisa, I've got maybe 1 or 2 minutes. If you want to throw any questions at me before you come in, I'm quite happy to field those questions now.
Yeah, I think we can go through some of them. There are quite a number of questions, but just before I pose those questions, I just want to clarify that there are certain questions which would be outside the scope of today's session, like BE and giving tax advice if you're not a tax practitioner and that sort of thing. So we're not going to obviously delve into that. But there was a few. I think we might need some of the participants to perhaps expand on it, because I couldn't understand the context of the questions. So the one was, how do you view a donation done to a funding PBO foundation? Will the recognition just be to registered PBO organizations, or will the flow to NPO, not PBO, even for profit, and be considered even though they perform PBAs? So I'm battling to actually get the context of that question. If the attendee could perhaps expand on that in the chat, and we'll try and address that. So I'm not sure what is the actual question there.
Okay, just in terms of that,
yeah.
I'm also not too sure of the question, but if you are making donations to any PBO that is regarded as a conduit PBO, that means they basically a fund organization, then that would qualify as an 18A donation, they would have to issue the 18A certificate. If they are just an NPO and they've not registered as a PBO, although they're carrying on activities, then obviously they wouldn't qualify. That donation wouldn't qualify for the issuing of a Section 18A receipt. It's quite important that the organization has to be formally approved by SARS as an 18A a PBO.
Okay, thanks, Luan. Then we just a few more, but if you could maybe just catch up on the chat as well, because I see there's still questions coming through and we might obviously not have enough time to address all of them. And we'll try and park some for the end, depending on how we're doing for time. In terms of, there's an organization that actually receives money spent out of the country. So the staff members are sent for conferences to other countries to present more information about the work that they do, and donors obviously provide support for this sort of costs that are incurred outside of the country. I did ask the questions, in terms of depending on the activities or the PBAs that have been undertaken, by this organization, but didn't get clarity in terms of those specific activities to assess whether the actual activities itself would qualify for an 18A or not.
Yeah, we'd have to obviously look at it more closely with the amount of information that we've received. I can possibly just give you an overview. The rule is that money should be spent in South Africa on 18A activities. Where monies are spent outside South Africa, these wouldn't qualify. Nevertheless, saying that, one would have to look at the nature of the spend outside South Africa to determine whether it's actually for activities in South Africa or not. So we'd have to assess that in more detail, obviously.
Okay, there's quite a few more coming through in the chat, but I think what we'll do is we'll probably, I think you can maybe address them. Yeah, because the time is up. We obviously need to move on to the next part of the presentation. So I'm just going to share my screen. So, do you have visual on my slides?
Yes, I do.
Okay, perfect. Good day, everyone. Firstly, thank you for the support and the fantastic turnout as well, and obviously keeping us on our toes with all the questions. As I always mention, even though this is existing legislation that has been covered, but you can always expect to be, getting questions with regard to 18A. It is an area that does tend to cause a bit of confusion. So yeah, thanks Ridwan for actually addressing that for us. I think it sets a good platform for the rest of the session. I think it's important to have perspective, in terms of 18A and the applicability to the donations. Always prefer to do presentations in person. Sometimes it feels like you're actually speaking to yourself when you can't see anybody at all. And then you've got obviously the chats popping up as well. So I'm going to just try not to get distracted and focus on the next part of the presentation, which is obviously, the 18A receipts. This is now the area where we obviously have seen the changes coming through. But before we actually do so, just want to actually just touch on the existing 18A receipts in terms of what was required prior to the 1st of March 2023. This information is not new. It's obviously existing in terms of the previous 18A receipt requirements, right? So it shouldn't come as a surprise to any of you in terms of this information that's currently on screen. I'm not going to go through into each point on here, but I just want to stress that these requirements are still very much required. So in addition to the new requirements, you still need to ensure that all of this information, like the reference number of the PBO, the date of the donation, the name and address of the organization and the donor as well, together with the amounts both in cash and in kind, would still need to appear on your certificates. Very importantly, I think there needs to also be a statement confirming that the 18A receipt or the 18A monies will be used specifically and exclusively for the Part 2 PBAs that Ridwan would have covered in South Africa, right? So that still sort of remains the same. So there's no changes in that sense at all, right? Just to move on, I think it's important also to cover, the reasons and the rationale behind why we've now seen these changes coming through, right? We've experienced challenges, obviously, from managing 18A and the entire process itself. Even SARS, has over the years also had abuse, on 18A. And we must remember that obviously having given, or because of it granting the donor an income tax deduction and reducing the liability of the donor, it does open up avenues for abuse. And we've seen that. There's been a number of instances. I'm sure you guys would have probably heard about it in the sector as well, in terms of these abuses that we see. So we just want to touch on that. Just some practical cases in terms of our experience in the nonprofit sector, obviously working in the sector for many years. Just to quickly touch on a few of them. I mean, I think this is an area that most organizations struggle with. We still see that even in the age of artificial intelligence and automated data processing as well, we still see a number of organizations sort of manually maintaining the 18A receipts. We were actually contacted when we sent out a circular earlier this year. We were contacted by a national organization with offices across the country, and they were concerned about their manual receipt books, which they've got pre-printed, and the new requirements. So they still sort of go out and handwrite on a receipt book and issue that out to their donors, as opposed to where you've got, with a database that you might be using perhaps as well. So this is obviously a challenge because it opens up avenues for abuse where, individuals could adjust those amounts on a handwritten 18A receipt, for instance. And we're obviously trying to move away from that. So that's one area which needs to be looked at quite carefully. And I think at best, most organizations perhaps use an Excel database, perhaps with mail merge functionality where, you'd use your Word and Excel to try and generate those 18A receipts. Again, whenever there's obviously manual intervention and manual data input as well, there's always opportunities for even human error. Right. I'm not going to delve too much into this, but just some practical examples. One obviously touched on your PBOs or your non-qualifying public benefit activities as well, which obviously flow into whether the organization would qualify as a public benefit organization or not. Now, we've seen practically, we've had an international organization, I remember a couple of years ago, they would donated, I think, a good few containers of blankets for their winter warmth project. And they had gone out and issued 18A certificates to the donor. The donor went ahead and submitted this in the income tax return, claimed the deduction. And what happened is when the donor was audited, right, the SARS auditor, all this auditor needed to do was just go and check the PBO number that was issued, obviously, or it was noted on the receipt against the 18A listing of public benefit organizations on SARS database. And they picked up that whilst this organization was registered as a public benefit organization, it wasn't an 18A PBO. Because remember, it's a dual registration, so the organization, whilst the activities itself qualified as public benefit activities, but whoever did the registration didn't realize that it's actually a dual, if you could call it a dual registration, where you have to obviously apply specifically to qualify as an 18A PBO. And in this instance, obviously the donation deduction was rejected, and the organization was quite surprised because they actually thought that we've got this we've got this PBO letter issued by the tax exemption unit on a SARS letterhead with a PBO number, and that means that we should be tax exempt and we should be able to issue out 18A certificates, which is actually further from the truth. We encourage you to actually go back and have a look at your PBO letters issued by the tax exemption unit and just make sure that it actually specifies that you are approved as an 18A organization. I think on the first page, in the first couple of paragraphs, or sometimes on the header, you probably find that it does appear on there, right? Likewise, in many instances, especially from a South African perspective, we get a number of religious organizations, where they probably undertake both religious activities, and together with that, they'd obviously also undertake welfare and humanitarian or social projects as well. So we need to be quite careful with that, because remember, the religious activities, whether it's the the running, the building, or the maintenance of a place of worship, that aspect wouldn't qualify, obviously, for 18 or for the issuing of 18A receipts for any donations utilized for those specific activities. But then you could find an instance where the social aspect might actually qualify. So it's quite important to obviously bear that in mind in terms of issuing out of 18A receipts, right? I think Ridwan touched on fundraising events and services rendered, so we're not going to go through that. But I think an area where we do find that there's been abuse is the overstatement of donation deductions, especially when we have manual receipts or receipts being issued out in Word documents, which can be easily editable by the actual donor themselves. So that's an area which we quite frequently see, taxpayers perhaps obviously trying to get a larger deduction in terms of the income tax return, together with fictitious Section 18A receipts being created as well. Because remember, in terms of the prior requirements, it was pretty easy for a donor to go ahead and actually get the information of a PBO. Your PBO number is sometimes advertised on your website, and any donor could go out and create an 18A receipt fictitiously and then claim a deduction. So these are some of the areas where obviously, SARS is obviously trying to curb, these abuses as well, to ensure that, that the deductions that are being granted to the taxpayer is actually valid and accurate, right? So it's quite important. And I hope that this will give perspective into why we've now seen these new requirements come through from SARS, right? So effective from the 1st of March 2023, we've got additional fields that would now be required on 18A receipts, right? Remember, this has been obviously out there. It's not as though SARS has suddenly come about and obviously, published the Gazette on the 24th of February to say that, we've now got these new requirements. This information has been out there for quite a while now, but it's just that now it's been officially legislated and it becomes effective 1st March 2023. So it's very important to remember that it's applicable to all donations from the 1st of March 2023, right? So you need to go back and have a look at your 18A receipts to ensure that we've got these additional fields on there. Most of them are pretty explanatory or self-explanatory, so we're not going to go into too much of detail. It will obviously come up on screen. We'll share this information with you as well, so you can ensure that your 18A receipts are obviously adjusted to ensure that this information appears, on there. So in terms of the nature of the person, it's quite important to remember that 18A receipts are not just limited to natural persons. You could have a company that makes a donation as well, or even a trust, and could qualify for an 18A receipt. So it's important to have the type of entity noted on there, whether it's a company, an individual, or a trust, right? The donor identification type or country of issue, and this would only be applicable to natural persons, obviously. If the donor has a South African ID, you obviously put that in there. The country of issue would be South Africa. Likewise, if the donor has a passport, perhaps, you'll obviously include that information on the 18A receipt, right? Quite importantly, the identity number or registration number of the donor. Here we're talking about obviously a company registration number or perhaps even the trust number. Now, it's important to have this information because this allows SARS to link that donation to the specific taxpayer, right? One of the areas where SARS hasn't really come in and made it mandatory just as yet is the tax reference number of donors. Now, I know there have been a number of organizations who expressed concern in this sense. Could it push donors off from donating to your organization if you're not going to start requesting them to provide you with their income tax number? Some donors might perceive this as being sensitive and confidential information and might not want to divulge that information to you. So for now, only if you do have that information available would you be required to actually input that on the 18A receipt, right? I think the contact details of the donor in terms of contact number and email address as well, I think that's pretty straightforward. Shouldn't be too much of an issue. And then likewise, a unique reference number or unique receipt number, which allows, obviously, it should be important that perhaps it should be sequential as well to identify if there's any gaps in 18A receipts. So essentially, these are the additional fields together with the trading name of the donor if this differs to the registered name, right? So I'm sure most of you would have heard of this by now. Hopefully it's not coming as news to you, in terms of these new requirements. But as I mentioned earlier on, it is effective as of the 1st of March 2023. Right. So what's next? I know Roshni is obviously going to be touching on this, and she'll perhaps be the best person to obviously give us timelines and that sort of thing in terms of the next aspect of where we headed with this 18A process, and the next steps and the next phase that comes in from the SARS perspective. It's quite important that we understand that SARS has obviously been on a modernization drive, and as part of this modernization process, using third-party data is quite critical. Now, I'm not sure how many of you might recall that not very long ago, even your IRP5 data, from your earnings or your salary deductions, your earnings thresholds and that sort of thing, you'd obviously have to manually input that into your income tax return itself. Likewise, even with your medical aid information, I mean, previously you'd have to still go in and put in the number of individuals that are part of that medical aid in order to get your deduction. But with the third-party data flow, this information now actually appears on your IRP5 data automatically. So you're no longer required to obviously input that data. What happens using third-party data? So what would happen in this instance? I mean, many of you would probably be well aware of the obligation on employers to actually submit biannually to SARS your IRP5 certificates together with your EMP 501s as well, providing them with salary data, your deductions, the bonus, and any other earnings that employees would obviously have earned during that year. What that allows is that it allows for the pre-population of that information, right? Likewise, your third-party service providers like medical aid companies, whether it's your Discoveries and your Momentums, they'd obviously be providing information to SARS to allow that information to be pre-populated in your returns. That minimizes the amount of, minimizes the errors and reduces, the actual, or the abuse that could happen had that information have to be actually manually input into your income tax return, right? Now, what's going to happen pretty soon is that, and obviously these additional fields that appear on the 18A receipts, or that's now required in 18 receipts, sort of forms the foundation for this next phase, right? Which is obviously now requiring PBOs to become mandatory third-party service providers to SARS, right? What does this mean to you? What would happen is that the donation information will have to be provided directly to SARS by PBOs, right? And what would happen then is that this information will no longer have to be manually input by the donor in their income tax returns, right? The donation information would be pre-populated within income tax returns, right? So I'm hoping you're able to see why we've now got these new requirements in, because this allows the information to obviously be linked to the specific donor taxpayer, right? So this now becomes mandatory going forward. Remember, SARS has already rolled this out and implemented this with the Solidarity Fund in the 2021 tax year. So if any of you would have donated to the Solidarity Fund, during the COVID disaster, you would have probably seen in your income tax return that 18A deduction is already, or would have already appeared in your income tax return. So they've already achieved success with this. So it's not a pie in the sky. It's not a pipe dream at all. It is something that's going to be happening pretty soon. I think Roshni would be touching on timelines. We've had discussions with them where we were looking at piloting sometime in May, in terms of obviously now rolling out and testing with organizations itself before obviously going live with regard to this information. It is possible that we could be looking at it for the 2024 tax year, which would be obviously the period 1st March 2023 to the period 28th Feb 2024, right? Now, in terms of how this would work, right, in terms of this IT3D submission to SARS, right? Remember, the onus is now on you as the nonprofit organization, right? What's going to happen is that there will be a biannual IT3D submission directly from your PBO to SARS on the 31st of October and the 31st of May every year, right? Again, very similar to the EMP 501 submissions that you would currently do for your employees and the PAYE submissions that you do monthly. Right, this would work via a direct data flow submission channel. Now, there's 3 options that would be available to you in terms of how this information gets submitted to SARS, right? You've got e-filing. Obviously, this would apply to smaller organizations that issue less than 20 18A receipts per annum. You could use e-filing to provide this information to SARS. However, should this exceed 20, and depending on the number of 18A receipts as well and the size of the files, right, you could use the Hypertext Transfer Protocol service, which is HTTPS. It's a bulk data filing. Now, it's obviously beyond the scope of today's sessions in terms of these 2 options that would be available to you. But in my limited technical understanding of it, from what I am given to understand, it's obviously a secure platform where you'd be able to obviously in bulk upload this information to SARS. Using the HTTPS, SARS will obviously share a link with you where you could provide that information to them. 4 certificates more, or if you've issued more than 20 certificates in that year, and I think there's it goes up to 50,000 records with the file size being less than 10 megabytes. You could use this option. It's the free platform available to you, right? And it is, as I said, a secure link to SARS, which would then allow you to provide them with that information, which would then allow for the donation information to appear on the donor's income tax returns, right? The Connect Direct platform is something that's offered by IBM. This would apply to records above 50,000 and for file sizes over 10 megs, right? Now, as I mentioned, we're not going to go into the details with regard to these 3 platforms. I think we could possibly look at a future session once pilot testing is done and rolled out with organizations, and we have a lot more insight into how this works, any of the challenges and data conversion in terms of your existing 18A receipts and how best to ensure that your data is in obviously in a format that allows you to use these platforms to provide it to SARS. So yeah, so that's, I think, the 18A receipts and the way forward in terms of the IT3D submissions. Just to quickly touch on it before Roshni comes in, with her presentation, I think we'll wrap up from our side and then we'll hand over to Roshni. It'll make it a lot easier this way. I'm sure Roshni would have some of the more practical aspects in terms of this IT3D and can confirm the timelines and that sort of thing as well. But just in terms of the future of fundraising and what we've got in the pipeline as well. So we actually now in the process of launching an app and a web platform, which will actually allow for nonprofit organizations to showcase themselves to donors across the country. It will be an easy to use platform where your organization would be able to go in and have links about showcase your social media links as well the activities that you undertake, allowing you to actually reach thousands of donors across the country. They could actually search via geographical location or even activities. This would then obviously allow you to increase your donor base and donations, because donations can be made directly on the platform itself as well. As I mentioned, it's both a web and a mobile-based platform. But I think most importantly, it would actually allow for the 18A receipting functionality to be fully automated. The donor, for any donations going through the web platform or the app itself, the donor could initiate the actually request for an 18A certificate, and in real time, it will get issued to the donor and stored on the platform as well. Your nonprofit organization will have access to this data at the back end in terms of however many donations would have been issued via this platform or generated via the platform, in that given year, and obviously have that information available quite easily, at the touch of a button. So we will be releasing a bit more information, as we go along. We have started testing the platform, and again, similar to SARS, we're also piloting it on our side as well. These are some of the organizations that we've assisted, just over and above just consulting from an 18A perspective, but we work primarily in the nonprofit sector. As I would have mentioned earlier on, we offer a range of services to nonprofit organizations across the country. And this ranges from VAT management services in terms of specialized VAT services offered to nonprofit organizations, accounting, compliance, tax, and payroll services to nonprofit organizations, statutory and fund audits together with Section 18A audits. Ridwan touched on those 18A audit certificates as well. We are USAID accredited as well, so grant and fund audits, an area that we focus on and specialize in. And then I think quite importantly, we're quite big in terms of compliance in the sector and obviously ensuring that your organization has full access to the tax benefits that are available to them and ensuring that you are compliant, so you can obviously then increase your donor base as well, because donors would prefer to donate to compliant organizations. So we've got a free tool available on our website, www.tpcsa.co.za. It's a free NPO needs analysis. It's a simple health check, which would allow you to quite easily, within a couple of minutes, complete that questionnaire, and we'd give you feedback on a no obligation, no cost basis in terms of, a sort of a health check of your organization, in terms of where you are from, whether it's 18A, whether it's obviously registering as a PBO or an 18A PBO in terms of income tax exemption, in terms of VAT registration, whether you're taking full advantage of the benefits that are available to you. And over and above just SARS, you're talking about workman's compensation. Are you registered for workman's compensation? Are you registered with the Department of Labor for UIF, for instance? And believe me, it takes you less than a couple of minutes to complete that, and we'll be more than happy to discuss that with you. And as we mentioned earlier on, we are obviously specialists in the actual nonprofit sector, having consulted to and advised many organizations across the country, including funders as well. And yeah, before we move on to questions, I think we'll hand over to Roshni. She can come in, and then I think we'll have a Q&A session at the end. But for any of you that don't have our details, our contact number and contact email addresses are on screen. You're most welcome to pop us an email and get in touch as well. We will be sending out an FAQ relating specifically on this. So thank you very much, Roshni. I'm quite happy to hand over to you before we perhaps address the questions right at the end.
Good morning, attendees. Thank you, Reza, for that very informative presentation. Very much appreciated. Just quickly switch on my camera. Good afternoon, actually, everybody. I am Roshni Rivera Green. I am from the South African Revenue Service, specifically the tax exempt institution segment within SARS. Our segment is responsible for taking care of all tax exempt entities. And I specifically am responsible for education, communication, and outreach. I have with me two of my colleagues, Holoko Sekosana and Motulo Saroka, as Verial indicated at the beginning. So I'm going to stop my video and start sharing my presentation. If you can just confirm if you see my presentation. Can you see my screen? Can just confirm.
Yes, we can see it, Roshni.
Okay, awesome. Okay, so as Reza said, I'll just be giving a slight overview on the IT3D submission overviews. So there we go. So since the introduction of the IT3D project, a number of developments has taken place. For example, we have published the business requirement specification, which includes the IT3D submissions on the 9th of February, 2023. The Government Gazette, which deals with Section 18A requirements, was also issued on the 24th of February. And we've been onboarding a number of early adopters of the IT3D pilot project. So what this means is it is organizations that have indicated to SARS that they would like to be part of the early adopters of the pilot project. So we have explained all the technical processes to them. What are the requirements from SARS in terms of the IT components? What is expected from them? And we are helping them get ready to be able to submit the IT3D information to SARS and one of the 3 channels that Reza mentioned. And just to add, so for e-filing, it is limited to 20 entries. for the HTTPS platform, that is limited to 50,000 lines or 10 megabyte files, and the Connect Direct is for files larger than 10 megabyte. Now, in terms of the HTTPS, you can also do updates in chunks as a CSV file or an Excel file that's been converted to CSV. And those are typically the conversations we have while we're onboarding the early adopters, explaining to them the detail with regards to each of the submission channels. Then in terms of our timelines, so our testing phase with our early adopters and volunteer testers is from the 14th of August to the 8th of September 2023. There'll be also another publication of the revised notice in terms of Section 26 of the Tax Administration Act. Section 18A approved institutions need to start collecting the Section 18A information as presented by Reza. And the compulsory submission of the IT3D information with the new requirements as explained by Reza and Ridwan during the 2024 filing period. So this would cover the years of assessment ending on or after the 28th of February 2028.
Roshni?
Submissions, yes.
I'm so sorry to disturb you for a minute, but is there any way, I know you only have a couple of slides more, are you able to just show one slide at a time? Because then I think there's been a request and it might be easier for the participants to view it in larger print, if it's possible.
Quickly, why? Just wanna see.
Perhaps in
That
slides.
better.
Let's see. That's much better. Thanks so much, Roshni.
Okay. So I'll just go over this again. So since the introduction of the IT3D project, which we actually launched last year, July, we've since published the final BRS on the SARS website, and that we done on the 9th of February. The Government Gazette that indicated the additional or enhanced reporting requirements for Section 18A was issued on the 24th of February, and then the onboarding of early adopters for the IT3D pilot project. We've actively been doing that since the beginning of the year. So as I said, our high-level timelines, the testing phase for volunteers or early adopters will be 14 August to 8 September. And then submissions of the IT3D data from the 18th of September 2023 for these early adopters. And then my last slide. And this is just our contact information. So should any of the attendees have any further questions that we might not answer here today, or you'd like to find out more about your compliance requirements as a PBO, you are free to email us at teisegment@sars.gov.za. Please note, we do not handle any queries regarding the status of applications for PBO status or for Section 18A. We provide education on compliance, on where you can obtain information. We also have a website that has all the information communicated here today available on there. And we have broken it down into what we call the TEI value chain. So from application for income tax to registration for income tax to application as a PBO, application for Section 18A status, what other taxes PBOs are supposed to register for, and what are the processes for each of these. And we've broken it down in those logical steps. You are also able to search for Section 18A approved entities on our website. So if you are not sure if your organization is approved for Section 18A and you might not, and you've lost, for example, your approval letter, you can check on our website. Alternatively, you can drop us an email and we will guide you on how to obtain that information. And lastly, if you want more information on the IT3D process, on the SARS website, there's the IT3D data submission page, where all the detailed information is on there, as well as the BRS, should you want access to it. And that is it from me. Thank you.
Thank you, Roshni. Over back to you, Riza, for the Q&A.
Thanks, Rhea. Yeah, we've got quite a few questions that have come through. A number of them seem to be relating to 18A and the issuing of 18A certificates for services rendered, whether it's actually a discount for, hosting of a website or perhaps even storage of information. Remember, that's still a service. So it's quite important, to obviously make sure that, it's either donations in kind or for cash amounts received, right? I'm just going to go through some of the other ones quickly, Ridwan. Roshni, I think some of it might be for you as well. So I'm not going to delve too much into the services again, because I think we have covered that. Ridwan, I think just in terms of the audit certificate, there's a few questions that have come through in terms of, I think there's a bit of uncertainty in terms of an 18A certificate. I think it's just the use of the terminology and the audit certificate, where some guys have asked whether it's one and the same thing, as well as who can issue that the audit certificates to the donor as well.
Yeah, thank you for that. Perhaps maybe let's use the word 18A receipt rather than the word certificate, just for ease of understanding. So once a donor gives a donation to an organization, that organization will issue them with a Section 18A receipt, of which the donor can then take a deduction against their taxable income. So that's a Section 18A receipt. An audit certificate would be applicable for those dual organizations. That means organizations that are carrying on both Part 1 and Part 2 activities. They would require an audit certificate. That means they would require, let's just say for ease of reference and for ease of understanding, they would require an auditor to come in, audit their books, confirming that the certificates or the receipts that they issued for all the monies that they've received was in fact used for 18A activities. So this would be by an auditor or a third-party provider. As I mentioned, the Act does not define who can issue that audit certificate, but it will be, just for ease of understanding, an auditor or your accountant will come in, do an audit, a check, an inspection, or whatever is required and agreed upon procedures with you, come and check all your 18A receipts that have been issued, and then check the spend against those 18A receipts, confirming that all the monies that were received where 18A certificates have been issued have been utilized for 18A activities, and they will provide an opinion that the inspection has revealed such and such. So this is the difference between the two.
Okay, thanks, Ridwan. If you could also just maybe expand on that 10%, the limitation in terms of the donation and the carry forward into the following year's deduction.
Yeah, as per my examples, I think perhaps maybe I did go through it at a bit of a pace, but once we do share the screens or the slides with you, you could then have a look at it and just get your head around the numbers. Effectively, is your deduction as a donor is limited to 10% of your taxable income. So in the examples that I gave in example 1, the donor's taxable income was 220,000. 10% of that would be 22,000. So any donation made under the amount, I mean, in total, so we're not looking at an individual donation, we're looking at all the consolidated donations for that financial or fiscal year would be added up. If it comes to less than 22,000, all these donations would be eligible for deduction. If it comes to more than 22,000, let's just say 25,000, the 10% limitation would kick in and they would only be allowed a deduction up to the 22. The remaining 3,000 Rand, in our example here that I'm now discussing, the remaining 3,000 can then be carried forward to his next fiscal tax year, on which he now pool that 3,000 Rand in with all his donation that he made for the next financial tax year as well, and he would assess the 10% again. So from year to year, you could have rolling numbers going through. From year 1, for example, we had 3,000 Rand rolling forward. In year 2, he could have gave donations of more than 10% as well, and more would then roll forward. So you could keep on rolling forward, and therefore you'd have to keep a log and a record of all of these. Hope this makes sense.
Okay, then just in terms of timelines within which an 18A certificate should be issued, I'm not sure exactly what's meant by this, but I'm assuming that the person's obviously referring to if a donation was received during a specific tax year, does that receipt need to be issued in that specific tax year, or whether perhaps it's donation received in March 2023, can the receipt be issued sometime during the tax year as long as it's before February 2024? So I'm not too certain about the context of that question, but maybe just to expand on that, and also in terms of a cut off. So for instance, if the donor has done an EFT on the 28th of Feb, but it only clears into the non-profit organization's account on the 1st of March, which year does that fall into as well?
Yeah, that's an interesting question. Ideally, the PBO should issue the Section 18A receipt in its tax year of assessment. So in the PBO's tax year of assessment, practically what happens is you might get an amount hitting your bank statement, let's just say in July, and you don't know really who the donor is. And then a few months later, the donor comes to you and provides the proof of the payment to you and then requests a Section 18A receipt. If it's in the same tax year as the PBO, then you may well go in and issue that that receipt. When it now goes over the tax year, so let's just say the donors or the PBO's tax year ends in February 23, a donor made a donation perhaps maybe in December of 2022, and now in March or April of 2023, they do require a donation certificate, or rather Section 18A certificate. And there is no, in terms of the letter of the law, there is no restriction that the PBO cannot issue the Section 18A receipt, especially if the donor's tax year perhaps maybe June 2023. So the donor is still well within their tax year. I would generally advise, however, you get into a bit of a gray area of the law, but generally I would advise my clients to try and ensure that all donation certificates, all donation receipts, Section 18A receipts are issued within the PBO's tax year. Quite important, because then it becomes a bit tricky, it becomes a bit difficult as well when donations were made in one tax year and then receipts is issued in the next tax year. But I understand it's something that perhaps we need to perhaps get more clarity from SARS, and maybe some kind of direct provision in the law to give us clarity in terms of timelines, because you do have different tax years from a donor and the PBO. And ideally what you want to do is you want to not limit or discourage the giving of donations because of an administrative provision, whilst at the same time ensuring that there is adequate control and there is no abuse in the system itself. With the new processes that's coming out, it's going to be a bit difficult. I'm not sure to what extent SARS has considered this, but obviously where a donor's tax year is different from a PBO's tax year, how that is going to flow in terms of whether that donation will reflect as a third-party information submitted, where you're going to get different timelines on tax year ending. So obviously we'll wait and see how that pans out when SARS has concluded their pilot testing.
Okay, thanks, Ridwan. And then we've got a question with regard to the issuing of 18A receipts. I'm going to use the term receipts and not certificate to prevent any confusion. In terms of the unique reference numbers on those receipts, and then how does it translate into a subsequent financial year? Does it have to flow? Is there any specific sequence that needs to be followed? So if you could maybe just expand on that.
No, it's just a unique number, so you could start off at 1 and just continue just on that line. It does not have to be in any financial year, but it should just, in my opinion, it's the unique reference number. It's for tracking purposes to ensure that obviously duplicates don't exist. You could, if your organization is AAA, you could start off with AAA1, AAA2, or you could just use the number 1 or REC, 18A REC1. It what works for you and what will ensure that control is in place.
Okay. Roshni, I think you could perhaps come in on this one, where we obviously, the requirement for the individual donor's tax reference number being compulsory in the future. For now, I know it's not mandatory, but could it become mandatory pretty soon?
I'd like for my colleague Loco to please answer that. I see Manaya's raised the hand. Manaya, if you please could go ahead.
Thank you so much and good afternoon, colleagues. Just to say that when we published the initial drafts, there were some concerns from the sector that clients may be less inclined to give. And we are also aware from some of our SARS studies that people don't necessarily have the income tax reference numbers on hand. Hence, we didn't make it a requirement at this point, but certainly we do believe that it's good practice that you should be asking for this, and it might be introduced in future. Because ultimately, if you don't have a tax reference number, you're not going to be claiming this receipt, or you won't be able to claim this receipt. But yes, thank you. It would be good practice. And if you can start introducing it, but we didn't want to make it mandatory at this point to avoid you from maybe having people saying, oh, we can't donate because I don't know my tax reference number, but I do know my ID number.
Okay, thank you.
I hope that answers the question.
Yeah. I think we've got a few questions in terms of some of the practicalities of obviously the new requirements, which is important for us to address, over and above just the income tax number, could it potentially inhibit donors from having to supply this personal information? I think education is quite important, if I might say. Obviously, donors need to understand why you're obviously requesting this information. And I think without educating them, then it becomes difficult for them to understand why you've requested that information. So they need to be made aware that this information obviously is required in order for them to claim their deduction in the income tax return. Without this information, obviously, they will not qualify for that deduction. So yes, it's obviously, initially it might be a bit of a challenge, but it's important that those lines of communication with your donors, is opened and you are transparent with them, providing them and sharing this information with them. So eventually they see the benefit in it as well. Because this is a trend across the spectrum, like we use the examples of your medical aid, for instance. Previously the donor would input that details on their own, but now it's obviously pre-populated. So likewise with donations, and hopefully with time, they would start appreciating and understanding that this is obviously the way forward in terms of these donation deductions. I'm just going to go back into the chat itself. Because there's a number of questions that have come up. We've tried to record all of them. Should 18As be issued without donors requesting the certificate itself? Many donors don't actually request the 18A certificates, but it would be in their benefit to actually obtain that 18A certificate because of obviously getting the income tax deduction. So sometimes it could be just that the donor doesn't understand how it works. So again, education is critical. We would encourage you to still issue it out to the donor and provide them with that information, even if they haven't requested it, right? Again, another practical question, which is an excellent question in terms of recurring donations. Can we issue an accumulated Section 18A at the end of the financial year? This is something that organizations tend to do, especially when they receive debit orders, on a monthly basis as well. As long as you remember, as Juan mentioned, is that it's covered in that tax year itself. So even if it relates to multiple donations and you're giving him one certificate, but all of those amounts were received during that tax year. I'm not sure if there's any questions that might have been omitted. I know sincere apologies. We've obviously had quite a large number of participants. We've done our best to try and, answer most of the questions. As we mentioned, the earlier part of the session was merely just for information purposes. It was not our intention to actually go through that in detail because that information was not new. Our focus was obviously on the new legislation itself, but we just wanted to put some perspective in terms of 18A as a whole. But today, I think it seems like we might need to actually have a separate session where we actually cover 18A perhaps in a bit more detail, because a number of these questions seem to be directed at that aspect in terms of whether donations can be issued for services, what activities qualify for 18A, what costs qualify for 18A as well. Ridwan, I don't know whether you want to perhaps come in. There's a question in terms of, is there a restriction in terms of which costs, one can issue an 18A certificate for? So for instance, salaries or admin costs and that sort of thing as well, or costs incurred. I know we did address this earlier on. Certain costs are incurred outside of the country as well. So maybe just if you want to just touch on that.
Yeah, I think what's quite important to understand is that if you have a public benefit organization that's only performing 18A activities, that means activities that fall under Part 2 of the Income Tax Act, Part 2 of Schedule 9 of the Income Tax Act, then any and all such costs would be directed towards the 18A activity. So whether if it's a direct cost, so for example, if an organization was providing meals to poor and homeless people, that organization would incur direct costs, which would be the actual provision of the food, the cooking of the food and provision of the food, but it will also incur indirect costs, admin costs, overhead costs, rental costs. All of these costs should not be separated. They all one consolidated cost in providing the food, in providing the 18A activity. I mean, the food is not just going to be prepared by itself. It's not just going to be delivered to poor children by itself. So all these costs go hand in hand. So when we're looking at these costs, then we should look at it as one cost towards providing that 18A activity, irrespective of whether it's direct cost or admin cost. So my answer would be yes, you can issue 18A certificates for such costs. The problem then, however, comes along when you have a dual PBO that's providing 18A and non-18A activities. When you do get costs which are overhead costs, then it becomes problematic on how do you allocate which part of the cost is towards an 18A activity and which part of the cost is non-18A activity. So one will have to delve into a bit more detail. A conservative approach would be not to claim any or not to issue any 18A receipts for those, but that's a conservative approach. A more practical and realistic approach would be if one could very methodically identify which costs are going towards the 18 activity, then one could issue it a receipt partially. But that one has to look at it in a lot of detail, and make sure that there's no abuse and proper control is in place. So then it becomes a bit tricky. With regards to overseas spends, the 18, one has to obviously look at the detail. The devil will be in the detail. The general rule is that if there's any funds that are spent outside South Africa, any activities, rather money that's spent on activities outside South Africa will not qualify. But will that mean that if I had a team of, let's just say my NGO worked in a disaster relief, and I sent a team overseas to go and learn how to do disaster relief at an accredited university or an accredited country which deals with these type of disasters, so my team could come back and implement it. Now, those costs in learning it, those costs incurred in the country or outside the country, or is it incurred for activities in the country or activities outside the country? So one will need to determine that. Whilst the general rule is for activities that are in the country, one will have to apply your mind and see, we've incurred an international cost, but it's actually for activities that are going to be incurred in the country, and apply your mind accordingly in that manner. I hope that answers the question or gives you some kind of guidance.
Yeah, I think that should cover it, Ridwan. It seems like we have covered most of the questions. I'm not sure if there's anything else that we have not addressed.
There is one here, which perhaps maybe Roshni can assist us. Will we eventually not be issuing 18A certificates to donor? That could well possibly be the outcome in the future for the questioner. When we do look at the evolving of the IRP5 certificates, you will recall that previously all employers had to issue manual IRP5 certificates or email IRP5 certificates to their employees. I know in the 4th schedule to the Income Tax Act, it still is their requirement. I'm not sure if they've subsequently removed it, but long after the EMP 501 mechanism was introduced, the requirement to issue certificates to employees were still there in the 4th schedule. I'm not sure it's subsequently removed, but in practice, you don't find that happening anymore, because your IRP5 certificates are automatically submitted to SARS, and it's nobody actually has a manual copy, or maybe some employers still issue it, but employees rely on what's already on SARS's database. So we could possibly see the manual certificates being taken away altogether. But this is all evolving at this point in time, and as we move into the future, everything will clear up a bit more. Roshni, I'm sure you could add on to something on that.
Apologies, I was battling to find my mute and unmute button. So with regards to the issuing of Section 18A receipts, needless to say, the organization as well as the taxpayer needs to keep all of their tax information for 5 years. So even though you are submitting the IT3D information to SARS, you also still will need to issue the donor with a receipt. So if SARS audits them, as much as we will have the data because of the IT3D, we may still ask that the donor, as part of their submission to SARS, provide us with the Section 18A receipt that was issued to them by the organization. So look, ideally in a completely paper-free AI-run world, we would have all the information and all the data would be pre-populated and there would be no need to still ask. But, just to make sure that all the I's are dotted and all the T's are crossed, if a donor is audited by SARS, they would need that Section 18A receipt issued to them by the organization. Thank you.
Thank you very much, guys. I think we have covered all of the questions. Sorry, I'm not sure if you've got any comments from your side to summarize and close off, but we must thank everybody. I see we still got quite a high number of participants still on the call at the moment. So hopefully we've caught your attention. I know it was a lot of information, but we're just going to stress again that remember the initial part of the presentation, the intention was not to go into detail, but just to sort of set the platform and to put it into context in terms of 18A and services and donations in kind and how you value all of that as well. We normally actually do, I think Ridwan can correct me, I think it's at least a half a day session on 18A and other tax benefits, specifically, and here we've obviously had to cram it in quite a short session, to give us time to address the new requirements. So thank you very much, everyone. We will send out, something in an FAQ, which would hopefully, assist you and provide some sort of guidance. So keep an eye out for that as well, and have a lovely day further.
Thank you, Riza. On behalf of Inyatello as well, I'd like to thank Turning Point Chartered Accountants, both Ridwan and Riza today. And I don't think I need to reiterate that you are a treasure to the nonprofit sector with your expertise and your generosity and willingness to share today. We'd also like to thank the tax exempt office at SARS, Roshni and her team, Holoko, who I saw answering questions in the chat, Mutulu and Mine. I'd also like to thank our team at Inyatello, who work silently and graciously behind the scenes for this to run smoothly and assist greatly. Jocelyn, Cassandra, William, Suzanne, Jock Bayanda, and our tech support, and of course our acting ED, Ferial Domingo. Thank you as well. We've mentioned we will post the presentation on our social media sites and websites of the partners by May the 5th. Unfortunately, we will not be sharing the recording. And just in terms of questions, we have posted in the chat. If you have any questions, please do reach out to the SARS email that has been provided, which was capital TEI, capital S, then small EGMENT@sars.gov.za, but that will be in the presentation. And then if you do wish to reach out to Turning Point and their services and some of the offerings that they're also working on, their website is www.tpcsa.co.za. Thank you for joining us today. Our presenters, like I mentioned, reached out to you from Cape Town, Durban, and Pretoria, which is wonderful. And wherever you are in South Africa, we wish you a pleasant rest of your day. Thank you to all of these nonprofits and all of the stakeholders who are not nonprofits who've spent time with us today, and the nonprofits as well who are, the heartbeat of our country and the glue that helps our people every day. So we wish you also a very meaningful Freedom Day on Thursday. So thank you all and go well.